Very good morning. Now I will discuss the diversion of income and application of income. Last lecture I will discuss tax planning objectives, and now I will discuss diversion of income and application of income. Diversion of income and application of income are two concepts that are recognized under the Income Tax Act 1961 in India. These concepts are used to determine the taxability of income in certain situations where income is diverted or applied by a taxpayer in a manner that may be affect the tax liabilities. Now we will discuss the two concept is diversion of income and is application of income. First we will discuss is diversion of income. Diversion of income occurs when income is diverted or directed away from the taxpayers who would normally be entitled to receive it. In such cases, the income is not considered taxable to taxpayer who earns it, but rather to the person or entity to which it is diverted. This principle is often invoked to determine the taxability of income that is diverted before it reaches the taxpayer's control. Just I am giving two some examples for this diversion of income. Income diverted to a spouse or a family member for their benefits such as through gifts or allowances. Income directed to a trust or other entity for a specific purpose, effectively removing it from the taxpayer controls. Income earned by a corporation that is diverted to shareholder in the form of the dividends. The key consideration in the case of diversion of income is whether the diversion is genuine and not a sham or artificial arrangement created solely to avoid tax. It is the example we have already discussed is the tax evasion and tax avoidance and tax management. And diversion of income refers to situations where income is legally diverted by a taxpayer to a third party before it reaches the taxpayers, and diverted income is not considered as the taxpayer income for the tax purpose. As per Income Tax Act, diversion of income is recognized. Following condition must be met. It means income will be considered in the following condition. It will be fulfilled. Existence. Number one is existence of a legal obligations. Number two, diversion before accrual or arise of income. And number third, diversion without the taxpayer's control. And number four, last is genuine and bona fide transactions. Now I will discuss first point, existence of a legal obligations. There must be a legal obligations on the taxpayer to apply the income in a particular manner before it accrues or arise to the taxpayers. And I will be discussing the details in accrues and arise in the block 2 when I define the definition of income, and I will discuss in the definition of the person. This legal obligation can arise from a contract on an agreement and any other legal arrangement. It means legal obligation must be a contract, agreement, and other legal arrangements. Number two, diversion before accrual or arise of income. The income must be legal diverted to a third party before it accrues or arise to the taxpayers. Once the income accrues or arise to the taxpayer, it becomes the taxable in the hands of the taxpayer unless it satisfies the condition for diversion of income. Just I'm giving two example here. Suppose you are doing a job and you are doing any contractual job. If you are doing job and you are continuously working in a 1 month and you get the after 1 month in the salary, it will be arise or accrued. It will be dimmed that your income is arise, not accrued. It will be taxable. Suppose your in a month of March, salary will be accrued, and but actually you will receive in a month of April. This is because the financial year 1st April to 31st March. Once the income is accrues or arise to the taxpayer, it becomes taxable in the hands of the taxpayer unless it satisfies of the condition for diversion of income. Diversion of income without taxpayers of control. Number third point, the income must be diverted to a third party without the taxpayer having control over it. The taxpayer must not have any power or control over the diverted income after it is diverted. Point third, genuine and bona fide transactions. The diversions of income must be genuine and bona fide transaction, and it must be a sham or colorable transaction intended a evidence tax. If all these conditions means all four conditions are met, the diverted income will not be treated as the taxpayer's incomes for tax purpose, and it will be taxable in the hands of the third party to whom it is diverted. It means those person paying to, he will be paid tax. Now, the second point is application of the income. We will discuss in the second point is application of income. Application of income refers to the utilizations or applications of income by the taxpayers for a specific purpose or objective. Under this principle, income is taxable to the taxpayer who has control over its use and application regardless of the whether the income is actually spent on retains. It means is actually spent or retains. Just I'm giving here some examples of application of income includes is salary received by an individual and used for personal expenses such as housing, foods and entertainment. All will be included as a application on income includes. Dividend received by a shareholders and reinvested in additional shares or other investments. Rental income is received by a landlord and used for the property maintenance, mortgage payments, and other property related expenses. It is very important for both diversions and application of income can have tax implication depending on the specific circumstances and applicable tax rules and regulations. Income Tax Act 1961. Tax authorities these arrangements to ensure that income is properly attributed and taxed according to the principle of tax laws. For example, if a taxpayer diverts income to a family member with no genuine intentions of control over it, tax authorities may deem it is diversion of income and attribute the income back of the taxpayer of the tax purpose. Similarly, if income is applied for personal benefit or retained by the taxpayer, it is generally taxable as income in their hands. Actually, understanding the concept of diversion of income and application of is crucial for the taxpayers to structure their financial affairs in a manner that complies with tax laws and rules while optimizing their tax positions. Consulting with tax professionals and the chartered accountant and lawyers or advisor can help taxpayers navigate these complex principles and ensure compliance with the application tax regulations. What is the purpose of recognized tax planning methods we had here discussed? Recognized methods of tax planning involve legally minimizing tax liabilities by utilizing various strategies and incentives provided by the tax laws. Here are some recognized methods of the tax planning. Number one is tax holiday, number two, reliefs, number third, deduction, and number four is rebate. Now I will discuss all 4 points one by one. First, I will discuss is tax holidays. What is the requirements and for the study, and I'm giving to here some example for the tax holidays and reliefs and deduction rebates also. First point is tax holiday. Tax holidays are periods during which specific taxes are reduced or eliminated to encourage economic activities in certain sectors or regions. These holidays can be at national or state or local and may apply to as per Income Tax Act 1961, sales tax, property tax, etc. Businesses often take advantage of tax holidays by scheduling certain activities or investment during specific periods to reduce their overall tax burden. Here, all tax holidays is maybe national level, maybe state level, and maybe local level. All is apply as per Income Tax Act 1961. It is the beneficial for. Just I am giving two examples. In some countries, there is a tax holiday aimed to promoting investment in the specific industries or regions. What is the basic purpose of behind this tax holidays? For the promoting of investment. So, for example, a government might declare a tax holidays for companies investing in renewable energy projects. It is mainly focused for the Indian government. During this period, companies involved in renewable energy production may be exempt from paying corporate income tax is 1961, encouraging them to invest in clean energies and technologies. Now is second point is here in the picture is the third point is deduction. I will be discussing third point is deduction. Deduction reduce the amount of taxable income, thereby lowering of the tax liabilities. Common deduction is includes business expenses. Here is the some expenses giving two example of that deductions. Business expenses cost directly related to running a business such as salaries, rent, utilities, and supplies, etc. And number charitable contributions, donation may be qualified charitable organization, mortgage interest paid on mortgage loan for primary residence or investment properties. And fourth point is education is expenses. Certain education related to expenses like tuition fees, students loan, etc. Suppose a employee is taking the education loan for a child and they are paying tuition fees for the school and college level also. If you pay the loan interest, it will be education expenses as a rate. For example, is a business owner can deduct various expenses related to their business activities, such as rent expenses, office, and utilities and salaries of employees, supplies, and equipment purchase. By deducting these expenses from their business income, the business owner reduce their taxable income, thereby lowering their overall tax liabilities. Now, I will discuss next point is tax reliefs, and those in picture is second points, but I am discussing in the third point here, the third. Tax relief directly reduce the amount of tax owed. They are often targeted at a specific group or activities to achieve social or economic objective. Means is social or economic activity objective. Examples include number one, retirement contributions. Number two, health saving accounts. It is in the, we can say is a medical policy. And third is tax credit for energy efficient investments. First is what is the retirement contributions? Contribution like is a pension. Contribution to retirement accounts like IRA or pension plans may be eligible for tax reliefs. And health saving accounts contribution to HSA and medical allowance used for qualified medical expenses may be tax deductible. Suppose is for example army and police, they are facility providing to medical facility or employees, and this is the tax reliefs, section 80DD. Third point is tax credit for energy efficient investments, credits for installing renewable energy systems or energy efficient applications in homes or business. For examples, many countries provided tax relief for contribution made to retirement accounts. For example, in the United US, and contributions to a traditional individual retirement account is IRA are often tax deductible up to certain limits. This means that individual can reduce their taxable income by the amount they contribute to IRA, and they are lowering their tax liabilities for the year. In the same as state government and central government. Tax rebates, now I will be discuss in the last point is tax rebates. Tax rebates provide a refund taxes already paid. They can be specific to a certain expenses or activities. It means they have some amount will be deductible and some amount is chargeable. For example, rebates for first-time homes buyers. Governments may be offer rebates to increase in the home ownership. Indian government and the state government providing to private sectors and government sectors employees. They are providing to deduction in the if you buy purchase in the first time your home, it will be all is the interest and amount will be deductible under section 80. Number two point is sales tax rebates. Some offer rebates on sales tax for certain purchase such as energy efficient appliances or electric vehicles. Government is providing to tax deduction if you buy purchase is buy an electric vehicles. They are providing to tax benefits. The sum is just I am giving to example is RTO. If you have a company office in the four places and you are belong to central government, it will be car registrations, and the government is new scheme is launched. You will not pay the one time is tax. You can pay it in a 5 years. It will be beneficial if the new registration number is providing to by a owner in the government. It is important note that while tax planning is illegal, engages in a tax evasions or fraudulent activities is illegal and can result in serve is penalties. Taxpayers should always ensure compliance with the tax laws, and check advice from qualified tax professional when implementing a tax planning strategies. It is beneficial for when you study for the tax planning. Now I will be discuss is the conclusions. What is the conclusion beneficial for the all points will be discussed is like is overview tax planning and uh, overview is what is objective of tax planning and what is the avoidance and tax evasion, tax planning, tax management, and what is the objective of tax planning and is uh, and versions of regarding your incomes and your is methods of consider is tax planning is last is discuss is in the field of taxes, tax evasions and tax avoidance are two separate but connected ideas. What is correlated both. Tax evasion is a criminal practice or is a purposely hiding in destroying one is income assets or transaction in order to lower tax obligation. It is a crime for which are harsh consequences such as fines and jail times. Tax avoidance pertains to deliberate utilization of legal techniques and code loopholes in order to reduce one tax obligations. Although tax avoidance is a typically lawful, it is frequently gives rise to moral and ethical questions since it is may be seen as taking advantage of loopholes in tax laws to obtain an unfair advantage. Now is some keywords in you can use for this searching this topics: tax planning, tax evasion, tax avoidance, tax holidays, tax deduction. Also, now we will check after this study complete what is you learned. Um, Here I will be discuss for questions. First question is describe the tax evasions. Here is the three option, which is the right option. First is complying with the tax laws and filing required taxes. And number 2 point is willfully going taxes within permissible bonds. And is last point is ignoring taxes unlawfully by using a prudent approach, which is the right option. Is I think is here is C is the right option, ignoring taxation unlawfully using prudent approach. I have already discussed in the last uh, when I discussed is the tax evasions. In question number 2, which of the following is an example of tax evasions? Number 1 point is deducting legitimate business expenses from taxable income. Number 2, failing to report income earned from freelance work. And third is providing accurate information on tax returns. I think here is B point is the right point is for this answer. Failing to report income earned from freelance work. It will be tax avoidance. I have already discussed is if you earn is 1 lakh rupees, but you are showing actually 80,000 rupees. Here is the loss is in economy 20,000 rupees. Now is question number third. What is the tax planning? Avoiding tax through illegal means. And second point is minimizing tax liability within the boundaries of laws. And third point is ignoring tax obligation altogether. I think here is right answer is minimizing tax liabilities within the boundaries of the law, because tax planning involved is it is the legal process. It is tax avoidance and tax planning is all both process is legal process. I think is B point is right answer. And last question, question number 4 is which of the following is primary goal of tax planning? why we are doing the tax planning. I have already discussed in the 4 to 5 points what is the objective of tax planning. But here is the what is the main objective of the tax planning. Number one, A, increasing tax liabilities, B, maximizing tax evasions, and C, optimizing financial strategies to reduce the taxes. Here is the right answer is C, optimizing financial strategy. Thank you very much. I have completed block 1. If you have any doubt, you can call me and continue.